Good evening and welcome to the Australian Stock Market Show. Now last week the All Ordinaries Index closed the week just under 0.5% down, which saw a tale of two halves. Early selling pressure followed by late buying. Now this week also marks the start of July, which is historically the most bullish month of the year. So are we about to see the market explode in the coming weeks? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at the All Ordinaries Index, and for our main topic in tonight's show, we get into the top 10 growth stocks to trade in the bull market. First up, we'll share our hot stock tip for the week, so sit back and relax again. Tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Deep Yellow, A2 Milk, Macquarie Group, where the Australian stock market is headed, and so much more. So get comfortable as we'll get into those soon. I'm Dale Gillam and I'm your host for tonight, and joining me are Wealth Within's highly experienced analysts and professional traders Janine Cox and Philip Tortevsky. And together we're Australia's most trusted stock market educators. Good evening, team.
Good evening.
How are we doing?
Great, thanks. Yep.
How are you, Phil?
Raring to go.
I'm great, ready to go. The market's, we're in July, so hopefully now's the time we can get moving.
Well, dry July, but hopefully the stock market isn't.
Exactly.
There you go. Well, anyway, well, tonight, as mentioned, we get into the Australian stock market. But first, let's take a look at this week's hot stock tip. Phil, what have you got for us tonight?
I've got a good one tonight. This is for all my speculative friends out there, and tonight's hot stock tip is the grey mining, DEG. So let's get straight into it. On your screen right now is the marketindex.com, and the grey mining, obviously it is just above $1. So Janine, this is one that you will quite like, I'm sure, once I'm finished with all of my analysis. Maybe not right now, but I mean, it's a stock that doesn't pay a dividend. It is a growth type stock, and it is one for, not for your super fund, it is for more of a speculative type investment. But anyway, the grey mining is a gold explorer, and it is does have activities in one of the world's tier 1 mining jurisdictions. Now, some performance on this stock: it's got a 2024 year-to-date return of -4.5, a 1-year return of -11. The sector's actually beating it at -4.62, but it is performing better versus the ASX 200 on a 1-year basis, which is quite nice. Now, it does have quite a large market cap of 2.8 billion. For a stock that is $1, it is ranked just outside the top 150, and so it isn't all that small. If we just go to the chart right now and have a look, I want to start off with the monthly chart here on this one, and obviously you'll see, this stock is one of those picture perfect examples of how a stock goes through its life cycle. You can see obviously it listing back here back in 02, the stock had this really huge run over a couple of months before it pretty much capitulated all the way down, falling through 2008-9, and then it went through this period of consolidation. And you often see stocks contract, expand, consolidate, and now we're starting, since making these lows back in 2016, 2017, the stock started to increase, albeit quite slowly. It has broken through that dollar level, which we have got marked here, and in doing so, you can see I've got also marked, it's increased its liquidity. You can see the shape of the bars all throughout this period, but now as we're coming above that dollar level, look how much larger the bars are. The opens and closes are spaced at different levels, which is, all signs pointing to the stock being much more liquid. And what I really like about it, currently you can see I've got these 2 stars. Obviously the stock's come back and tested a level back in the past of that 70 odd cents, found support, albeit touched the low, shot on up. It's repeating price action to me in a very similar fashion, testing that previous low back in October 2023. Now starting to poke its head above. We've got this momentum line here in grey as well. So, I mean, for those that are a lot more riskier, let's say, not risk adverse, they might even be looking at this stock.
Risk tolerance, probably.
Risk tolerance is the word that I'm looking for. If we just go back to the chart, you can see that, some might be even looking at this above that $1.20, $1.30 level. But I must warn everybody and I've got this black box, or I suppose rectangle area. And to me, the safer and more, I guess, solid area to be looking at this stock is above that $2 level, because there is previous resistance, obviously, from March, April 11, also May 2023, and some periods back in 2003 as well. So what I'm saying is, if this stock can clear $2 quite nicely, obviously the potential upside is astronomical at the moment. So, I mean, one to put on your watch list. Again, not a stock that is a, I guess, riskier type stock, more for a super fund or anything like that, but one to put on your watch list and have a look, because it is a gold player. And
did you say not for a super fund?
Not for a super fund, yes. Yeah. And if the gold price does rise like it does look like it is going to over the next couple of months, then, hey, might be something in there for this one.
So wait for it to break through that downtrend line, and then decide whether you want to be more aggressive or wait for the more conservative
above
spot.
$2, yes.
Above the $2, which is probably a better way to do it anyway. I agree with that anyway, but that is it for our weekly hot stock tip from Phil. Now, shortly we'll get into our topic for tonight. But before we do, right now is your opportunity to get involved in the show and have your questions answered. Now, remember, we prioritise phone callers, so call now on 03 9290 9988, or you can text your question to the number on your screen. Now, the first caller into the show right now will get a free copy of my book, Accelerate Your Wealth. So make sure you pick up your phone and dial 03 9290 9988. Now, while you do that, tonight we'll give you our thoughts on the Australian stock market. So how about we get into that?
On your screen right now is a chart of the All Ordinaries Index. Let's take a look at that. You can see there I've got the weekly chart up first of all, just to have a look, Dale, to see what's going on in the market, which you already know what's going on in the market.
Always.
But just to add a little bit of flavour to this, we can see that sideways move there. The market so far this week, if I expand that up so that you can see the current bar, it's sort of threatening to the downside, but it hasn't broken out of the range of last week's bar, which is interesting. So until it breaks either below or above that bar, we've still got no direction on our market, which is really quite interesting, and it can be annoying at the same time for many traders who are just wanting to see it get moving.
It's just following repeating last week. Last week it went down early in the week and came back later in the week, but it's doing that consistently at the moment. And then we've had some other weeks where it goes down early in the week and then up early in the week and then down. And
well, what I wanted to talk about now is that when the market's like this, traders are either, and yes, I'm talking about you out there, either trying to jump the gun and hopefully, see the market move up, or to see it actually go the opposite way and fall away and therefore short the market. So what I wanted to do is have a look at the monthly chart just for a moment.
Well, can I say something?
Oh, I don't know.
You don't trade the market, you trade the stocks. So it doesn't matter where the market's going up or down, you can find stocks to trade.
True.
But you can go onto your monthly chart.
Some people want to trade the index. So looking at the way that the market has unfolded, the funny thing here, Dale, is that traders will often try to trade trade short in a bull market, which we know happens. But there are times where you actually have a better advantage, obviously, if it's crossed a trend line. So this is something I knew that you would like to be discussed tonight, given that you're so passionate about trend lines. But if we just go back to the chart, you can see there on the bottom left, the market made this really strong move out of the 09 low. When it crossed that trend line, it went sideways. And this is where traders can get stuck, Phil, and having fixed ideas. The trend line is usually the indicator of that it's going to go down. And in this case, it pushed back up, but then it had its biggest fall. That was in, I can't get a date there, but I think it's May 2010 when it pulled back. So that's 1 month right now. As a trader, if the market pulls back, Phil, you're looking at this and thinking, okay, what sort of opportunities have I got here? It went down about 13%.
I've just had to double check because you're talking about shorting, and so
it doesn't have an offer, does it?
Must be
How did I know that I would get a
dig
dig about this one?
I mean, I'm loving it. Great, yeah, good shorting on the All Ords Index. That's interesting. But yeah, you're 100% right. I've got you laughing. But yeah,
all right. So okay, the market pulled back, but that was a small round, but an opportunity to get a short trade in there just for maybe it's been just a couple of weeks. Obviously, if you're testing the market and checking to see what's going to work, then this is to your advantage. But the trend line itself can be one of the greatest tools to actually determine when's the right time to take those opportunities or start looking or be prepared to look for the best opportunity. Now, we saw here the market pulled back. This was actually in June 2011, the market pulled back quite strongly, but it closed up, right? And then the following month it went down. Again, we got one really solid month down after that. Some people would be shorting all the way down, but there are some of the best opportunities are right near the bottom, as we know, because that's often where people rush to sell their stocks right before the low comes in. So in 1 month there was 16.5% down. So all through this period here you can see the same sort of opportunities happen. The market went sideways, but then the biggest opportunity came just after that. And this repeats throughout the history of the All Ords. So we see it again here. Will we see it again now? That's the big question. But at the moment we're still bullish on the market. We may have a bit more of a pullback, but just look out for that, but at the right time, not when the market's super bullish, but when it's actually indicating that it's falling. That's the point.
Okay, well, if you want a full detailed, a bit more report on the All Ordinaries Index, watch Phil and our market report that we do every single Monday for talkingwealth.com. But that is it for our thoughts on the Australian stock market. And before we get into our first email, remember to get your questions answered live on air. You will need to text or call into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now let's get into our first question. Now Chris is asking about deep yellow. I'm currently looking at deep yellow for a short-term trade, 1 to 3 months. It's risen and respected an upwards trend line. Every time this stock has touched this line, it has rebounded in a positive way, making large gains to the upside. Now the moves have happened over 50 to 80 day period. My questions are as follows. Is it a buy right now with a tight stop loss, or wait for confirmation to the upside, which may be risking missing large moves as this stock is quite volatile? Chris, do you want to take this one, Phil?
Yeah, sure. Great stock, Chris. And how about we just get to the charts right now to have a quick look at what he's saying. And I mean, look, he's right in the fact that it is a volatile stock and it is so far respecting. We've got a trend line here on the weekly chart, and I'll just zoom the weekly chart up for you now.
So is it a buy now?
No, definitely not a buy now from my perspective anyway, because we always talk about trading on confirmation. That's the first thing. The stock's still falling, to be honest. This week, obviously, it is showing signs of a reversal. We're only Tuesday, so we're still early in the week. But to me, it's one thing for it to come back to this trend line, and it's another thing for it price to be confirmed at that level. So the most important part right now is how is he going to confirm that that
well, how do you get in and how do you get out?
Basically, at the level. If
it's volatile, you need to know both of those before you get in.
And he's in a bit of a situation because he doesn't want to miss much of that volatility.
Well, there's a bit of FOMO there, I thought, perhaps. And is that justified?
Look, for a stock like this, if you're looking at it, particularly on the weekly chart, I can see how he can see that it does bounce quite sharply from these levels. So it might just mean tweaking the strategy just a little to fine-tune that entry a little bit earlier. But again, even in doing that, you need to do it with confirmation. So whether it is you go, a level lower in terms of time frame, but still you need to see confirmation in price, and that confirmation you're going to get, the lower you go in time frame, is going to be worse than the higher time frame. So on one part of me is with Janine saying, don't be so eager to get in, even though you're not going to, get the majority of what you're looking for in terms of the trend, but you're going to get the safest part and the best part, and that's what you want at the end of the day.
Well, I'd be going with Janine too, because she's never wrong.
I was just going to ask Phil, so where would you buy then if you were looking at it?
No, well, I'm waiting for confirmation. I mean, I'm with you, Janine. I'm waiting for confirmation, and I'm more than happy to give up 10-20% of that bottom.
Don't jump too early, that's what you're saying.
Exactly.
Cool. Well, anyway, we do have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
This is William from Sydney.
Welcome to the show, William. What's your question for us tonight?
I was just looking into Eagers Automotive. Stock ticker is APE.
ACE, yep.
APE, yeah.
I was just wondering, sorry, yep.
Yeah, I was just wondering, how you think it's going to go next 6 to 12 months?
Okay, so you're not in the stock at the moment, or you are?
Yeah, I am. I just got it Friday.
You bought it last Friday. Okay,
Yeah.
fantastic. All right, well,
Yeah.
Phil's got it up on the screen and we'll take a look at it for you. But thanks, Will from Sydney, for calling in.
All right,
What do you
hey,
reckon?
yes. Janine,
Will,
do you want to take it?
I think
No,
we've
Janine
covered
can
this
take it,
one
yeah.
on a recent show, and
We did.
Will, I think that this is trying
you
to
bought it
be a
last
bit
Friday?
too cute, but I think you're a bit eager.
Well, that's a pun,
Play
isn't
on-
it?
play on
A
words.
bit eager on
That's-
eagers.
Yeah, I know that you don't
Well,
like
why?
my
You've got to
jokes.
explain it to Will. So explain why he's a bit
Well,
eager.
it's actually in a downtrend, Will. So
Yeah.
that's rule number one: don't buy a stock when it's falling. Catch a falling knife scenario. That's the first thing. So I don't really want to ruin your thunder, but I know I just have. The stock has been trading down, and you want to get it when it actually turns. So if we go back to the chart and have a look, I'll show you what I'm talking about. So you can see that it might have bottomed out here. You may have picked the bottom. It's possible. But we don't even have any sort of confirmation yet. And I just want to put see if I can fit a trend line in down there. But we may have the early stages of what could be a potential opportunity, but you're just way too early, I think. And this is about letting other people take the biggest risks and waiting for the lower risk opportunity, which is once it's cleared that line as a minimum.
Yeah, I mean, look, I totally agree. If you know what you're doing in terms of accepting the risk that you're taking by trying to trade these types of moves, because more often than not, you're going to be wrong. You're not going to be able to pick that low. And to me, it looks like it's just it's had 1, 2, 3, 4, 5, almost 6 weeks up. And it's only managed to claw back about a third of what it's fallen in 1 week on the 24th of May. And now it looks like it's falling back down. So, and generally at major market, at major lows or tops, price does like to find its feet. So it does give you that, up and down volatile or erratic type of price action, which you're probably going to see here. So I'm with Janine. There's no real confirmation at all from a weekly perspective that the price is going to bottom and move on up. So you're taking a risk. As long as you're aware of that and you've got your stops in place, then I guess that's all you can do.
Well, there you go, Will. Thanks for calling in. And if you want to be like Will, give us a call as well with the numbers on your screen. Now we've got an interesting question from somebody called Dale that I'm sure you all have pondered at some stage. He says, I would like to know how you set a stop loss on a stock that has a strong upward trend that you can't get a trend line under. Is it acceptable to position a stop loss between 10 and 15% from the weekly close or the high? The reason I'm uncertain is what happens if it falls out of bed overnight and you're waiting for an exit signal? I'm not currently in a stock like this, but would like to know so that if and when it happens, I know how to manage the profit and the exit at the right time. Now, additionally, I learned a lot by watching Matt Rad's digital investing videos recently. In fact, I believe I may have found another potential income stream, something I've heard Dale talk about quite often. So thanks for that, Dale. So he's talking about a Matt Rad video or interview I did on talkingwealth.com. But I won't tell you all about it. You've got to go watch it yourself. But this is a great position to be in, isn't it? That the stock's going up so fast you can't get a trend line on it. What do you reckon, Janine?
Well, you have to really just look at your rules for a start. So if it was a trend line that was the exit strategy, obviously you would consider whether you think the stock might come back to meet a trend line that's unconfirmed. So that's one of the first things to do. But there may be other rules, and it depends how fast it accelerates, because there's not just one simple answer. As you know, Phil's just grinning there at me.
Well, two things are going to happen. Literally, one is he decides to manipulate his rules, let's say, and a lot of the time people do this. If a stock's run away, they'll try anything to find an exit, and that might mean changing the time frame, and they might get that exit. But in doing so, the goal of trading is to let your profits run.
Correct.
Right? And what may seem at that time like a good exit might in fact just be a short-term pullback, with the stock then continuing on that really bullish momentum and running another 50, 100, whatever percent it is. So, don't be so eager to get out of a stock when it's doing what you want it to do at the end of the day.
Well, he's just trying to set a stop loss. And I know, and to me it's a bit context related too.
Yeah.
Because I've had plenty of blue chip stocks where I couldn't get a trend line on for love or money, like News Corp in the day and QBE and others that, in a week or so, before it falls away, you actually get your trend line confirmed and then it starts falling away and you're exiting. And it's happened to me numerous times. But if you're talking about a lower cap stock, it's a whole different ballgame.
It is.
You know, top 50 stocks, not a problem. I would not worried about it at all on a top 50 stock. But if you're trading smaller cap stocks, then I'd be more concerned. Is what is your exit rule? So he's saying maybe 10 or 15% below the latest close or the latest high on the bar, the latest high of a bar. But
that's really
it's
you know, it's
wishy-washy a little
that's
bit.
what I was thinking
but
too.
it's okay. But you know, I'd be studying the stock a lot more to work out
Well,
what
that's
it does.
why, look, you know, our students have a basket full of rules that they can use so that if that sort of thing does happen, that they have a choice, because they will have actually tested what the other rules are likely to do and know what their second best option is.
I reckon what we fear most doesn't generally happen too. So generally it won't fall out of bed anyway on you. If you pick the right stocks, they won't fall out of bed on you anyway. Now, as I mentioned, many would have pondered that question that the team have just answered. But moving on, it's time to switch gears. Now, to be profitable in the stock market, we need to understand the future. After all, you can't buy yesterday's returns. That said, we can learn from the past to determine how the market might unfold into the future. So let me take you back to a time in 2005. Now, the All Ordinaries Index was trading at record highs. Many experts were calling a top in the market, saying it can't go higher. It was too expensive. This was somewhat understandable as the market had been rising since March 2003. Janine and I did not hold the same view, and as history shows, the market did go higher. In fact, one of the strongest bull runs in history was unfolding into 2007. So, why did so many experts get it wrong? Well, one simple thing they failed to realise in 2005 was that we were in a long-term bull market, and not just any bull market. We believe we're again entering a very similar period over the next couple of years. And so we want to help you be prepared for this so you reap the rewards. Now tonight we'll get into our top 10 growth stocks that are likely to give you the best returns in the upcoming bull market. But before we do, it is important we discuss how both bull and bear markets unfold, because this is critical to your ongoing success. Now we'll also discuss what you can expect in the next part of the cycle, and most importantly, what you need to watch out for, especially the signs that the bull market is nearing the end so you don't get caught. Now we know that there are particular stocks that accelerate a bull market. Then there are stocks and sectors that indicate when the bull market is peaking. Just being aware of this alone will help you see the inevitable peak earlier than the masses and ultimately allow you to maximise your returns. So let's now turn to our expert traders for answers on what they look for when determining the end of a bull market. Now, Janine, I'm going to go to you first.
Well, that was an interesting experience back in the GFC. So
it was.
The first thing that I really want to shed light on is that obviously our market is moving at different times. So some sectors of the market will be moving faster than others, some will peak before others. And the whole thing for traders is to understand is that acceleration becomes your advantage, because with a simple trend line under that acceleration, you can actually tell when either the sector or the market is more likely to be peaking out. So that acceleration starts to slow off and it starts to roll over. That's one huge thing. One of the funnier things is you'll start to see all sorts of people talking about the stock market at the peak. You'll get taxi drivers talking about it. It'll be the hot topic of conversation, which really, if you look at it right now, we don't have that yet. We don't have this euphoric buying. We don't have people, every man and his dog, wanting to buy shares. So when that happens, these are two sort of things you've got to look out for, what the charts are telling you and what the mood of the market is, which we did a presentation years ago for a group of traders on the mood of the market and how all of that works. And it's that psychology which is so interesting, isn't it?
Ah, yeah. So what you're saying is so that
we're going to be talking about the psychology side of things
after
the break.
In our bonus content for our Talking Wealth people. But it sounds as if your barista's giving you stock tips. He's probably had too much caffeine. Anyway, okay. Before we get into which sectors will lead the next coming bull market, I want to share a graph that explains returns in a bull market. Now the graph shows the average length of a bull market is nearly 4 times that of a bear market. Now the return in the bull market on average since 1980 is or 96%, sorry, and the average number of days is 997, whereas the average bear market average is negative 29% in over 289 days. Now you will notice at the bottom of the chart there have been 12 bear market declines that tipped 20%. So with this in mind, Janine, tell us about what we can expect from the next bull market.
What do we like to see? Well, do I want to go with the odds or against them? What do you think?
Well, you've got to go. I mean, we know the market moves up 2/3 of the time roughly and down 1/3 of the time. So
I wasn't asking you for the answer.
Oh, okay. Sorry, I'll shut up.
Okay, so the whole issue here is, do we want to go with the odds or do we want to go against them? And I think we would rather go with the odds. Is that true?
Absolutely.
So often than not, we know that the market is going to go up in the bull market over 100%. And in some bull markets, it went up significantly more. So, I'm expecting that we'll have some sort of gains like we did in the 2000s, like we saw in the 90s, that really nice strong rise into the high. The only thing that I'm not clear on is what the tech side of things is going to do to the market coming into the peak, because
that could accelerate it.
It could.
It very much could accelerate it. Anything else you want to add?
No, I think I've got loads more, but I want to share.
All right. Janine's lost for words. Okay. Good. Okay, now the market is going to rise, but now, right now the mood is pessimistic due to interest rates. But those of you who are graduates of our course or are studying with us know how to research, so you find the truth. And you also know when to be patient. Now remember Warren Buffett's quote, "What the wise do in the beginning, the fool does in the end," which is saying those who fail to understand the market now will follow the masses and ride the market up and all the way back down again. Now it's up to you to decide which group you want to be in. Those who are wise and educated, or the other group who ride the roller coaster. Now we know the market peaked in November 2007, but the question you need to ask, did all stocks peak at the same time? Now I'm going to go to you, Phil.
No, they didn't. They didn't at all. They, by studying the sectors, which we're going to get into, they were peaking at different times, some early, some late. And that's the beautiful thing about the market. I know, financials were right on time and makes sense because they are such a big sector. I mean, if financials goes down, generally the market's going to go down with it. But what was real interesting was materials didn't peak until later on in that year. So it was 6-7 months later, maybe a little bit later than that. And they're such a big sector. So, whilst the general market was falling, it again speaks to the fact that there are always opportunities out in the market, even during market corrections. So, if you're nifty enough and you know how to look through the sectors and find those opportunities, then they'll always be there.
I totally agree with you. I know the same sort of thing happened in '87 on my study there. Some of the big stocks were falling already before the peak, so they were signalling the end of that bull market anyway. But now we're going to show you exactly what happened to the sectors. Now those that peaked ahead of the bull market peak and the ones that peaked last. Now just before the crash, Janine, can you walk us through these?
Yeah, I'm looking forward to this part. So how about we just have a look at the chart that we've got here. It looks like a massive spaghetti, I know, but a very colourful one. But what we've got here is we've got a number of different sectors. So we've picked a couple of sectors that actually were very slow and they tended to peak early. So consumer discretionary was one of those. And you might be surprised, Dale, that infotech, it surprised Phil and I when looking at this, that infotech actually peaked early. Now,
it was 2007.
But 2007, it was dominated by telcos, wasn't it? So therefore, consumer discretionary, telecommunications, it's sort of in the same sort of, consumer basket.
Is it pure tech like we're starting to see nowadays? No.
Yeah, which is interesting, isn't it? Because, tech nowadays is totally capital intensive. It needs a lot of capital injection. So then that sort of gets me thinking, does that mean that the tech will still peak early because they'll run out of capital? I don't know.
It might, but they might peak later too, so that'll be interesting to see what happens here.
Yeah, so if we come back to the chart now, you can see there that we've got the blue line here is materials. You can see that aqua sort of line. It's peaked here in 2008, and along with energy, which also peaked in 2008, and that actually looks like it's outrun, but we'll show you a graph shortly, a chart shortly of that. It's outrun the materials even. The financials peaked, obviously the financials are the bulk of the market, peaked, that marks the peak of the market in 07. So this one here was consumer discretionary, and the one down there, that's the tech. You can see it's dwarfed by the rest of them. So that's a really interesting point to have a look at, and then to see what's happened after that as those sectors fell. But I'm not so much wanting to focus on that now, more about which ones peaked before and after. Phil, did you want to say anything?
It gives you an opportunity to see the signs before they happen, as you just said before, you know, and the big stocks, they're also ones that are going to give you those signs beforehand, because it's those big movers where the big money's going to be shifting in and out of the market that you're really going to see when the market is turning. And so it's
so interesting,
it's
isn't
a beautiful way to look at the market, because a lot of people...
Let me ask you a question. What causes the crash?
Well, that's the thing, isn't it? It's the people go over leverage into the market.
Correct. Who wins on that?
And then on the other side of that, initially it's the banks.
Yeah.
And then
87,
finally
2007, 29's all over leveraging, over borrowing. So the banks are obviously going to be there at the peak, aren't they? Because they're making money hand over fist at that time. So, but it is interesting how it works. So we're not seeing that at the moment, are we?
We're not seeing that at all. Still warming up.
Moving on. Now it's time to dig in our top 10 stocks. Now, Phil, I'm going to get you to take this one away.
All right, so we have got a watch list up on the screen right now, which will show you, if I just shift it over, well, actually, we're going to move on. That was our best and worst that we were going to show, but onto the watch list. We've got so much stuff here, Dale, we don't know what to show, but we did say the best 10. Now, interestingly enough, if you have a look at which sectors these ones are coming from, they're coming from the materials sector and also coming from the energy sector, which, by the way, were the two best performing sectors just before the 07 crash. And if we just go back to the watch list and have a look, some of the gains here, you will be so surprised. So what we've done with this particular watch list, we've chosen the stocks in these sectors which were the biggest, so the highest market caps, which we just spoke about the importance of that.
Yep.
And right on the far right, you'll see the percentage gain from the low in January 03 for each of these stocks, all the way up to the peak before the crash.
So the 2007 peak.
Yes. And
Okay.
so you're looking at that, you know, if you were in the market from 03, some of these returns are absolutely astronomical. And some of them are because, like, for example, Fortescue Metals, you're looking at 219,000% return.
That wasn't much.
No, not at all. I mean,
If you say it fast, it's okay.
but I mean, a lot of these is because given the price of the stock at that point in time and the way it ran, obviously gives those kinds of returns. But if we just go back to the watch list, you'll see, you know, Paladin was another one, 70-odd%. But what I actually found more interesting was that there were some stocks, some of the bigger stocks, that were actually falling during that whole period. So it shows you that, you know, the stocks do fall. Not everything goes up during the bull run, and not everything will go down once the market starts falling. So we have picked from this list our best 5, I believe it is, Janine. I know Janine's stuck in a few more.
Yeah, but Janine can't count.
Yeah. But how about we get to the stocks?
Yeah.
Or did you want to say something?
Look, I just think that's pretty exciting, but will some of those stocks repeat? That's the thing, because if you think about where, say, FMG was back then and the type of company and the, you know, size of it now, not just because it's gone through a whole, you know, phase into the green energy, but just because it was, these companies obviously are totally different, aren't they?
Because we're talking about 20 years nearly ago.
Yeah.
I mean, once we get to the next peak, it'll be 20 years pretty much.
So the question is, what is the next FMG? Like, we've got these lists of, you know, these healthy big stocks, but there could be the, what is the next, you know, FMG? What is the next New Hope? What is the next Beach Energy?
Or Paladin.
Paladin. You know, and Paladin, could it repeat the same sort of thing? That's, you know, could
But
be.
is it going to be a lithium stock? Is it going to be
uranium stock?
An AI type of stock? Is it going to be uranium? What's it going to be?
Good question.
But I mean, you've also got to factor in, if you are going to start looking at stocks, because FMG, if we just bring up the chart, you can see that FMG back in 2003, and I'll bring up the monthly chart just for a bit of...
But just while you're doing that, what we know it's not going to be is consumer discretionary.
Well, you got no
Right.
banks and no...
No, I mean in terms of the biggest gains.
Yeah, that's what we're talking about. So
Yeah.
there's no... So not putting a bank in there, even though you think they're going to gain.
Yep.
The big gains are going to be coming somewhere from the material sector or the energy
energy.
sector.
Yeah.
They're the
Now
two
the
ones.
infotech, as I said, is the question mark.
So that could
Because
be
of
that could be
technology.
the hot pocket
Could
rocket.
be.
I mean, I'm not ruling out... I know healthcare generally doesn't do the best. But I mean, I wouldn't rule it out completely, especially some of those, you know, pharmaceutical type stocks, which I've seen
the pharma
flying.
We're going to do a topic on that in a couple of weeks.
Right, let's get into some charts.
All right, well, I was going to show Fortescue Metals and just have a quick look. That's the reason why 03.06 cents. Now, you know, how many stocks are you trading at 6 cents at any time?
But, you know, we're not trying to say to trade them at 6 cents, though, but like if you look at FMG and where it started to trundle up here, these were the signs that are starting to indicate that it could be an interesting stock. We're not saying just to pick a bottom dweller, but that sort of classic pattern here. And this is on the monthly chart. It's had a pullback, let the mugs take that bottom end and just wait until there's some sort of trend established. And once it started to take off, look at the gains it had. But how many stocks have we seen that produce these sort of patterns that do it over again?
Look, recently we saw one with Drone Shield. If I can remember.
That's right,
so they're out there. They're definitely out there. It's just a matter of finding them and as...
Was that your claim to fame, that one?
Oh, look, you know.
He's got many. He can't remember all of them.
One of many,
one of many.
Yeah,
right.
so look, yeah.
So should we look at the next one?
Yep.
Paladin. Go for it, Phil.
All right, so again, another stock which out of 2003, let's just bring up the monthly chart just to show you, but out of 2003, a stock 20-30 cents, and again it shows you what opportunities were present out of 03. Look at this, the stock started rising, started becoming a little more liquid around 04.
And look, it was worth what, $4, $5, $6 around that time, $10, getting up towards the $10 mark. It had gone up a lot, but still was a good opportunity.
Absolutely, and some people would be looking at this, and I mean, these charts specifically speak to the fact that if I wind it back to 2005, I mean, you're looking at this from this perspective here back in 05, it's gone from, you know, $12 or whatever it is, $2 all the way up to $40, and some people would really disregard this stock and say it's too expensive, don't touch it. But knowing what phase we're coming into the market, we're coming into that, you know, real bull market. The stock literally went all the way from $40 up to $90, so it almost doubled in the space of a year or two. So when you do see, it's a good lesson when you do see stocks that do look vertical. Don't completely disregard them, especially knowing the time period you're in, because they could keep on flying.
That's really good advice, actually.
I totally agree with you. And the other interesting thing is the bull market started in March 2003, and both of these stocks took off, but 2004, 2005 were the better times to buy it, even though they'd gone up a couple of 100%. And there was
the riskiest time was to buy in that bottom.
Was the riskiest time to buy at the bottom. So we don't have to jump in really quickly. If we find stocks now, we don't have to jump quickly.
That's exactly right.
It's a perfect example of why you always say, you know, don't play in that section of the market. The best opportunities, believe it or not, are right nearing that second third of that trend, which so many people fail to see. But
all right, another stock.
But it just the other thing, as we go to another stock, is that with these runs, who'd have thought that this stock was going to do what it did in terms of the percentages? But imagine how many others are going to experience that through this time. I mean, look at this stock, Ampol, ALD, Caltex it was at the time, and the sort of stellar rise that it had, you know, prior to that peak of the correction. But similar sort of thing, it just kept going up, pulled back a little bit, kept going up, as Phil was saying. Nice big moves there as the stock continued to rise. So this was one of the better performers too, wasn't it?
ALD. And look how nice, I guess, one thing about these kinds of markets, it's how clean the price action is and how easy it is to trade. I mean, it's one of the most beautiful, it is the most beautiful condition to be an investor, trader, or particularly when you're looking at charts, and make things so simple. And if we just go back to the chart, you can have a look. It also gives you a really clean indication of when it's time to get out, because as this market's running up, you see it extending, and then you get your first sign, okay, hang on, it's gone up, but it hasn't gone up as much as the previous one. And then it gets a little bit choppy, stally, goes for another extension, but then that move is also less than this move. So you're seeing the trend dwindle down, and as you've said, Janine, it's just simple techniques like these trend lines that you can put on a chart. Look how early it gets you out of this stock and how precise it is, letting you keep
on a monthly chart too. There's all these people trying to trade daily charts.
Doesn't it?
Yeah.
Exactly right.
And when you think,
Then
why are
it
you wasting
is.
your time on a daily chart when you can just do that? So
Totally.
look, there were people who bought your book prior to the GFC and came and thanked you personally, I remember,
Wow,
for that,
truckloads.
because all they did was draw a trend line on the chart and it saved them bucket loads of money.
Oh yeah, they made lots of money, but they saved the first thing, it saved them lots of money, and the second thing, they knew when to get
Kept
back
it.
in again and make lots of money. So, are we finished on this chart, or you got more to talk about?
We've got another one.
Yeah, keep
Yep.
going.
All right, Woodside Energy. Now this was this always Woodside Energy? There was another name for it, wasn't it, back in 03?
No, I think it was Woodside. I'm pretty sure it was Woodside.
WPT. Oh,
It had- it might have
Woodside, same-
changed.
different code.
It used to be
Different
called
code, yes.
WPL.
Yeah.
That's
not-
right, yep.
Yeah, so different code, same name.
Same name.
Same, but different. Okay.
All right, now we can see with Woodside, a lot of these stocks, as Phil said before, they were not, the $50, $60 stock. We were talking about penny stocks before in the case of FMG and some of those other ones. That this is
It's
back in
$10.
April 2003, around $10, $11. And look at how far it went just in that first run up, which is just 2 years, 2 to 3 years, 369% to the high here in April 2006 before it continued to push up higher. Now it's just the dream run. Now you may have been taken out here. There was a huge acceleration away from the angle of the trend before it then slowed down a bit. But this sort of a pattern here is just classic case of a consolidation before it then took off again. So multiple opportunities in this rise to get some good trades in. If you didn't want to trade for the long term and you were trading more medium term or even short term traders wanting to trade for cash flow, it's a beautiful time for you as well.
Yeah, it used to be Woodside Petroleum, remember?
Yeah, that's right.
Woodside
Exactly.
Energy.
See, I'm
So
not
that's
that young.
So, okay, the next one is BPT. So Beach Energy is a really interesting stock. You can see it's quite volatile, a lot different to the other stocks that we're looking at. And back here this is January 2003, you can see it went vertical a number of times through this run, very different to what Woodside did, which had a sort of a slow burn on the way up from 2003. This can tell you a lot too as to when the stocks actually take off. So it was June 2004, like Dale said, it was somewhere around 2004 where it was a
year
really,
after the bull market
really
started.
clear run, which is sort of around the time of where we are now, really. So this is a 500% return. So I think people, the challenge is having enough money to be able to put into the market over the next few years. Even though,
Yeah, you run out of money before you run out of stocks.
yeah, and even though it doesn't feel like, you're in a bull market right now, it never does at the start.
But that's why leveraging and over leveraging is the later third of that bull run, because you run out of money, all your cash is in the market, you're seeing the growth, you're getting that equity in your stocks, and then you go, wow, I can make a lot more money, so people then borrow more money, and that's what accelerates the snowball until it goes poof and explodes.
Exactly.
So,
And I mean, just to finish this one off, there were signs, like if you just go back to the chart, prior to this huge run up, and just very much like our market over the last 4 years, it had been going sideways. So you do see it in price, you see that pent up energy, and then all of that get released, and obviously with Beach Energy, it ran up really, really strongly. And our market is doing the same thing at the moment, so.
See,
Another
fortunes
stock?
are made after the crash, right?
Yes.
But it often takes years, in some cases, for different sectors to get going, doesn't it? We know that after the crash, like the 09, when the market came into the low in 09, there was that big run up, but then it just went sideways. It went all
sideways
over
for
the
a few
place,
years.
really choppy. It came back significantly after that when the tsunami hit. But to me, this is a much safer and cleaner time to be trading the market, a perfect time to learn right now.
absolutely. Have we got another stock?
We sure do. Next, we have BHP. Now, obviously BHP, another one, look at it coming out from 1998, obviously quite steady, but again, giving you that sideways type price action, then breaking out in 03. Again, if we bring up the monthly chart here, and I just want to play that example once more, if my mouse cursor can. So, imagine winding yourself back to 2005 and you're looking at BHP. I know there is a lot of people that would be thinking, looking at it, once these bars happened, or this green one here, back in 05, thinking, okay, the top's in.
Up 400%, so
Yeah.
the top's got to be in.
I should be selling BHP. But I mean, it just continued on rising all the way up to that high in 07, giving you so many more opportunities to get involved and really make, quite a good amount in a very short space of time.
Well, there you have it from the guys. We can make a lot of money in this next bull market, but that is it for our topic for tonight. Now stay with us as we still have got plenty of emails and stocks to go through. For those watching on YouTube and Facebook, remember to comment below the video. Now you can watch all of tonight's show plus the additional exclusive content, including more stocks from tonight's show on Talking Wealth. So head over now and grab your free 7-day trial on talkingwealth.com. You can also watch our weekly Australian stock market report where we share our views on the market. Now every week we also share multiple stock tips that will pay for your yearly subscription to Talking Wealth. Now if that's not enough, you'll also get hundreds of amazing interviews with global industry experts in the stock market, finance, gold, money management, mindset and wellbeing, fintech, artificial intelligence, crypto, business and loads more. It's all on talkingwealth.com. Now moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03 9290 9988. That's 03 for Melbourne, 9290 9988, or you can text the number on your screen. Now whilst we wait for your call, let's get into our next email. Now Samit asked, just wanted your opinion on A2 Milk. I currently don't own the stock, but I'm thinking of entering the stock soon. It looks like a new uptrend has begun. Just wanted to understand if it's too early or too late to enter the stock. Samit, you want to tackle that one, Janine?
Yeah, Samit, really good stock choice and at a perfect time as well, not just in terms of the context of the market, but also in terms of the stock. So how about we go and have a look at the chart? And you can see there, we've got a little pullback here on the weekly chart. And it's probably a couple of weeks down there. Nothing to be concerned about at this point, but I wouldn't try to jump in right now thinking that you're just going to get it a bit cheaper from the peak. The key is to wait till it goes up and takes out that high and to see the stock get running again, because if you look at the bigger picture, the reason for that sort of, being careful there is to note that we have this really sort of a sideways move there, where it's not a momentum line, Phil.
No, I think you're trying to make some resistance there, aren't you? Do you want a bit of help on that, where to find the horizontal line maybe?
No, it's all right. But we can see that it's pulled back from there and we're just now waiting for the stock to get a move on and take off through all of that. But, maybe some of you out there like A2 Milk and you might like to make a comment about whether you think that this is going to be a big booming stock or whether you think, there's better value elsewhere. But, I can see some significant upside there.
Yeah, look, it's interesting right now because obviously the stock is running up and you can see it's been pulling back. So I wouldn't say, Sumit, that we're at the start of a new uptrend just as yet. We're still yet to confirm that, but the stock is pulling back in this current uptrend that it's in. To me, I think the safer play, if I can just move this line a little, is clearly there's been resistance back in June 21, obviously December 22, and the way this move's happened quite sharp, I think it needs to clearly break through this $730 level, and perhaps something like.
So you agree?
Well, what I would like to see on this stock is if it can break through this level and then find its way on the other side of this $7-8, and then see what's going to happen moving forward. Because the way these ranges are playing out, to me, it's pretty much stuck sideways between 7 and 4 at the moment. And albeit this stock, is a stock that is quite volatile, I would like to see on this bigger time frame, this monthly chart, a nice move and then a really healthy pullback above this, I guess, area where the stock's stuck sideways.
Right. So it's been an uptrend since December. Right now it's not a buy, and you haven't missed the run.
We like the choice.
We both liked it. You both liked the choice. So there you go, Samit. Keep watching and just make sure it does what Phil says before you jump on into it. Now we've got a text from Paula who is asking thoughts on GHY. Had a nice pullback recently. I bought it this morning at $1.18 for a short to medium term and had a 13% today from the purchase price. Paula, 13% in one day, that's pretty good, isn't it?
Yeah, well, I guess it's good.
What do you reckon,
It's
Phil?
good on text, but it's a bit cheeky, Paula, because we always say be careful bottom picking. And I think that's what you might be doing at the moment. If we just go to the chart, yeah, the stock's obviously been falling. We're a Tuesday here, so if you've bought it and you're already up 13%, then you must have bought it somewhere around there through these lows. And you know, we obviously talk a lot on this show about trading with confirmation. Now, the stock has been falling since May of 2024 and quite sharply. There is potential support, you know, from a previous level in March here, so you do have, I guess, that solace in that. But for me, if I'm trading this stock, I'm really waiting for confirmation. Given it is so volatile, you've been saved on this occasion, but just be careful.
Well, you know, one day doesn't make a retirement. You know, just because it's gone up one day doesn't mean that's what, unless she's sold out and got 13%, it's not in the bank
It's
yet.
where the stop loss is for me. That's the
Correct.
most important piece of the information, Paula, and that's what I really would like to know. You're more than welcome to ring into the show or contact us again, but would love to hear what your thoughts are on that, because that's really going to protect your money going forward.
But I mean, regardless of the stop, would you be buying a stock that's just in free fall and then buying it at the lows? Because I mean, the stop's important, but at the end of the day, I think confirmation before you buy is more important than buying a dip and putting a stop in there. I don't.
Well, there you have it, Paula. None of us would have bought that stock today, and well done on making that 13%. Hopefully, it's one that you really will be profitable with, but maybe you need to look at your entry rules. But now we do have a text from Carson, who is asking thoughts on GQG. Bought at $1.68, and I'm looking to use a trend line as a trailing stop loss. Carson, so whose turn is it now? Phil's, is it?
I say it's mine.
Oh, it's yours, Janine. Okay,
We don't
ladies
have to fight
first.
about this though, do we? Okay, so Carson, I think this is a really interesting one. What I think is fascinating about this one is the sideways move that it's had before this big run. So it's actually broken out now. Phil, I'm trying to find that line there. There we go. It's right down the bottom. You put it down there, didn't you? You can see there the sideways move. It's finally broken out. It's sort of checked that bottom, but you know, not a lot of pulling back to check that before it's taken off. And it just looks amazing. To protect this, I can see a trend line could be placed up underneath that. So it's a really nice stock. If you're not in it now, I wouldn't be buying it. But if you are holding it, I think it's going to be pretty easy to protect.
I don't remember his buy price, but he's saying it's $1.60, so he's doing okay on it at the moment. Trend line's okay for both of you?
Yeah, I'm really happy with that.
Okay, both. You got 2 thumbs up there, Carson, from the team, using a trend line as your stop loss, so well done on the stock. Now, Nick is asking about Macquarie. He's asking, could you take a look at Macquarie Group? I don't own the stock. However, Macquarie broke out of a pattern and presented an entry last week or this week. I see the stock getting to $300 in the future. Would love to know your thoughts. And if you identify the same pattern as I have, Nick. I'm lost again. Is it Phil?
Yep.
Okay, you can go first.
Okay, Nick, let's go to the chart and have a look at Macquarie for you. And a pattern on the weekly chart. Let's see
we
if
talked about it last week on the show.
$300 though, that's the point of conversation here. Is it going to get to $300?
Well, let's show $300, and $300 is all the way up here now. I mean, to me, you know, the market ran out of the COVID low about.
Why don't you just make him happy and say, yes, anything's possible?
Well, you know what? Anything is possible.
Eventually it will be $300.
Given it is a financial stock and the way this one actually moves, if we just zoom it back out, there is potential for huge growth with Macquarie. What I really like, and why I am leaning to the fact that it is not out of the realms for it to get to there, is that it has positioned on the monthly chart coming out of this huge consolidation period. Now, you know, I know he's talking about patterns on a weekly chart, but I mean, you could mark up some levels like this and see that this stock is breaking out of a really nice pattern on a monthly chart, had a test of it, now resuming that upward momentum. And we know stocks that come out from these long pattern type movements, they do expand quite a bit. So, I mean, an expansion similar to the range that it's happened during this period is not out of the ordinary. It is financial stock. Financials is leading the market. So I think it's a good stock choice right now. It is trending up, it's running. Just be careful. What I'd say is once the stock gets through to that new all-time high, obviously you do want to watch it and see what happens at that level, because that'll give you the real indication of what it wants to do heading towards that $300 level.
Right, so we've got 2 thumbs up.
260, I'll say.
You're going to be conservative. 260,
270.
Well, I'm not going to break a dream. Why not?
$300 easy, no problems. There you go, Nick. We've got 260 to 300 anyway. Now we've got a text from King, who is asking thoughts on Cooper Energy. COE is the stock ticket code. Don't own it, but have been keeping an eye on it as it's moving sideways. What do you reckon, Janine?
It's illiquid. but in terms of the pattern setup that we can see on the chart, it's consolidated nicely. If you get a breakout above the top of that, this thing could quite easily go to 30 odd cents, possibly 40 cents. On the monthly time frame, it looks really nice. It looks like it's broken the angle of that long-term decline down into the low. So that's always a good sign there, seeing that angle broken. It's just consolidating
Looks
really,
great.
Dale, after a nice move up. If that was a more liquid
King
stock,
knows what he's doing.
you'd say that was a boomer,
King
wouldn't
knows
you?
what he's doing. He's not a...
I asked you a question.
Sorry, I apologise. What was
If
the
that
question
was a
again?
big stock and it had consolidated like that after a breakout, you'd be jumping up and down out of your skin.
Absolutely, I would be. That's what I'm saying. I like it. So King, as I was saying, King knows his stuff. He's pretty good. Any comments from you over there, Mr.
No,
Phil?
I agree. Just the only thing I'll add, and it's a positive thing, I mean, look how this stock's held up. Obviously, our market, June, April, May, June, hasn't been great. And a stock like this, so illiquid, in that energy space, obviously energy, it has not been performing. This is holding up well, so it is bucking the trend. Good choice.
So you know how we talked about energy materials being the ones that run on and boom longer? And okay, it's in the right space, as Phil said. So perhaps could this be another one of those energy stocks that ends up being one of the,
Well, I was
2000%
thinking about
is,
that because we've seen all those stocks we talked about earlier with your Fortescues and what they were doing in 2002, 3 and 4. So King could be onto something there. So there you go, King. There's a 2 thumbs up from everybody, or add mine and there's 3 thumbs up. Now we've got a text from Jack who is asking thoughts on Aristocrat Leisure. Missed the entry at $47.40. Your thoughts? Okay.
Didn't Jack ask us about this one already?
He did. He was looking
Couple
at
of weeks
about
ago.
40 to 46, and then the stock just shot out, broke down sharp, and then but shot back up sharp. Which I can totally understand why he might have missed the entry, but I mean, now it's positioned.
We've all missed entries, haven't we?
Yes,
That's
yes.
right.
It's something you've got to get used to as an investor or a trader. It'll happen. But right now, the way the stock is, obviously, it's had a few really sharp months coming out from May and breaking through to new all-time highs. So the only thing I'll caution, and I'll show some examples of why I would be just a touch cautious, and that you can see, the stock, anytime it breaks out through to a new all-time high, it does have periods where it does experience a pullback. So through their new all-time high, stock pulled back a bit, and if you just go throughout the chart, you'll see that all throughout there are periods, broke through a new all-time high, then had a pullback. So right now it's at an interesting level, broken through to a new all-time high. Perhaps an idea could be that you take this as more of a maybe short to medium term proposition to see how it reacts from these levels. Not to say that you shouldn't buy it, have a look maybe more short to medium term and then see how it plays out. If it plays out the way it should in terms of that continuation, then you could be looking at it for
So
more.
what, we're
Okay,
talking
so-
2 to 6 months?
I would say so. Given where it is right now, it's more safer to be cautious rather than extremely bullish.
So managing on the weekly, not the monthly chart.
Yeah, for sure.
Okay, so there you go. So Jack, Phil's saying 2 to 6 months short-term play, but it could turn into something longer anyway, but just make sure you've got a stop loss on that anyway. Now we've got a text from Tom who's asking thoughts on S32, pushing the uptrend since March. Thoughts on Tom? Now S32 has been down for a few weeks, but starting to look better now the last week or so.
But it's not uncommon because, I mean, the stock had been ripping. If you just look at the
It
weekly
has.
chart, it's had 1 week down, if you will, which is where I've got my mouse cursor hovering over back in the 14th of June here. But, since February 24, look how strong this movement up has been, and it's only pulled back about a third of this whole move. So, again, it's had 2 other weeks where rather than falling, it's consolidated sideways, and now this week it is breaking up. And, I mean, this is a stock that's in the same group. Its peers are BHP, Rio, and look at what this is doing.
Top
and look
20
at
stock.
what the other stocks are doing. I mean, it's really performing, leading. I see $4 as a very likeable target very soon again, and if it can get through $4, then I think more of the same. This is quite volatile. When it runs, it runs. So
I'd like to see it pull back a bit more first.
So, pessimist.
But
I'd like to see it go up. Thank you.
so sometimes that's
So would Tom.
that's an indication in itself. Depending on how hard or how
Yeah.
little it's pulling back.
Yeah, it is. But I mean, it looks really, really good at the moment anyway. So, but I'm agreeing with Phil and not so much agreeing with Janine at this one. So, hopefully she's not right. But you've got 2 thumbs up from me, Tom, so well done on S32. Now remember to show your support for our channel and smash that like button, please. Now if you enjoy watching and you want to see loads more of our content, now click subscribe now. Subscribing helps others find our channel so we can help them too. Now before we let you go, what was your favourite part of the show? Make sure you comment below. Was it Phil's hot stock tip, our topic for tonight? Or was it one of our viewer questions? Now let us know by commenting below this video. Thanks to all those who are watching on YouTube and Facebook. If you are watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all that and more. Next week in our main topic, we get into the top 10 traders stocks watch list. Should you buy, hold or sell? Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now if you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us for now. Goodbye, good luck and good trading.